Hey, it's Clay Trader, and this will be a video chart on ticker symbol NLST. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I realize this is kind of hard to see, but given the big gap down that happened here, that kind of just is thrown off the perspective of things and the formatting. So it is what it is, but I can still illustrate the main point that really stands out to me, and that is not to rub salt in anyone's wounds or state the obvious, very bearish day. But the interesting part comes in regards to what happened after the open. And after the open, again, within the context of a big gap down, the price just went sideways. Now, don't get me wrong, and I wish I could say the market was this easy and trading was this easy. Just because there was a big gap down and then the price went sideways, I'm not saying that this is some sort of guaranteed bottom and that this thing is guaranteed to bounce, going into tomorrow and early next week. Now, would I be shocked to see some sort of bounce? No, that would not be shocking, but nobody, including myself, can sit here and say that it's for sure going to bounce because this is for sure the bottom. Now, it is a nice sign of strength on the bulls' part that they were able to just get the price to go sideways. I mean, the gap down created quite a bit of downwards pressure, but you can see that the bleeding finally stopped right there at 59 cents. The bears tried multiple times to push down through that level. You can see right there the bears tried, and then again later on in the afternoon the bears tried. But to give credit where credit's due, the bulls have been doing a good job so far of holding at 59 cents. So far being the key word, because there's no such thing as a guarantee. And I keep repeating that because I don't want anybody to get the impression that, oh, this guy said it's for sure the bottom, so I'm going to go grab my kids' college tuition money. I'm not saying that. It's just from a trading perspective, from a risk versus reward perspective. If you understand that, then this is quite the interesting setup. So if 59 cents is indeed some sort of bottom and the price does start to bounce, where are these levels of resistance at? The key area of resistance to me, and in my opinion at least, if there's going to be any sort of worthwhile bounce that gets started, is right there at 63 cents. That is as high as it could get today. So if any sort of bounce is going to get started, that's going to draw an organic momentum, start to set off scanners and bring in other traders. In my mind, again, 63 cents is that key hurdle. So very interesting setup. Big nasty move down, but then the bulls did a good job of absorbing the selling pressure and getting the price to go sideways. So is this some sort of bottom? We shall see. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.